pat ourselves on the back for shorting the absolute high in the market and having the first consecutive 2-day pullback of 0.5% in, I don't know, a year or two. So great. Hopefully, if you were in that trade, you covered enough to make sure it's a winning trade no matter what happens now. And let's talk about the possibilities. So zoom out a little bit further. So since we got above 276, pretty much was a moonshot after the retest here, right up to 286. And that accelerated trend led to a pullback. And the backdrop is we're now in the busiest week of earnings season. And so I put it on a note at the top of the written game plan, which is the earnings reports of large cap stocks may dictate to a certain extent what happens over the next week or two. Now, we'll get to Boeing, but basically you have some large cap stocks that have run up recently, and if the market has already priced in those potentially good numbers, then you could see a larger pullback. Like Boeing today is gapping up on really good numbers. If the market wasn't anticipating something good, but not something really good, they can continue to hold up well and perhaps come in and do a retest of the high or maybe even go a little bit higher. So that's one possibility. Obviously, the possibility we favor and much rather prefer, and some of us still have some puts on the market, having not covered all of them, we'd like to see a further pullback or a little bit of a pop, maybe to this 284 area in a failure, and then a lower low down into 280, and then we'll kind of see. So this would be like the first possibility. We move above the pre-market high. We kind of get down to this gap down area from yesterday's initial gap down at like 4 in the morning, I guess when Europe opened. That would put us in the high 283s to 284 area. And I mean, I would use that opportunity to short today if we got there and hopefully get a close back down below 283. And maybe we'll move sideways for a day or two for once and then break to the downside. That would be ideal. We came up here, failed, moved sideways, and then broke to the downside, giving everyone a clean entry to get involved. If we get a close above 284 today or tomorrow, obviously it starts to become riskier in terms of a move back up towards the high. Let's get into IWM. So IWM is kind of in no man's land. It gapped lower. It failed at 158 yesterday, I guess, on the open, then came off. Didn't flush all the way back down to support from a couple of weeks ago. It got down to 56.80. Now we're at 58 again. I guess the way I would look at this one is if it got up to this 58.40 area, that would be where I'd be looking for failure against this prior support from last week. You can see that pretty clearly, 158.40 to 158.75, this little band right here. Put an alert at 158.30. Do a little short into this, bigger short into this, and see if it rolls over again. So that's IWM. All right, so here's Boeing. So here's daily. So Boeing had this move here, this breakout on January 5th from 300, and then started to look to short it here in the 320s. It actually went all the way up to 350 before coming off to 335. Now we can kind of see why it had such a big move. So with the report, it just blew past the prior all-time high. It's up here. A normal thing would be for it to come in a little bit on the open and test here. If these type of numbers weren't priced in, it would come into this area here and then catch a bid and close the day in the 350s or maybe higher. 360 is exactly 20% above the breakout for 300, so I'm sure people will be watching that level pretty closely. We take out the pre-market high. If it comes into 350 to 352 and it catches a bid, and you want to play it for a move back up to pre-market highs, that's fine. A failure, or I should say a move down into here and then a shallow bounce to maybe 354 or lower, and then a move below 350 could get you a deeper pullback. What does a deeper pullback look like? Probably something into the mid 340s in this area right here. Next one is EA, Electronic Arts. It's in the game. So the numbers didn't look particularly good at all. But this is similar to, you know how the same way like all the software companies are converting over to the subscription models. There's changes going on in these game stuff, and I haven't played a computer game in like 20 or 30 years, so I'm not that familiar with it, and I don't follow it that closely. But I do know that esports has become a really big thing, and Amazon bought that company, Twitch, for hundreds of millions of dollars, I think, or maybe $1 billion. So this is a big deal, and these game makers, as they move stuff online, there's a new source of revenue for them. People competing against each other online. I think they call it digital. You can correct me if I'm wrong in the chat. But anyway, so that to me is the most logical explanation for gapping up to here. So what has it done coming into this earnings? Well, it started to fill this gap from the May earnings, so from 3 quarters ago. Did that back in November. Didn't quite fill it though. And bounced off of 100. And once it got back above 110, went pretty much right back into this consolidation range. So it put the high in here back in August, so 116, 10%. Yeah, so it's moved about 10% above this consolidation range, which is, I wouldn't say absurd, it's a lot. I've seen crazier. So here's initial reaction. Obviously, when the numbers didn't look good when they first came in, I guess it went down. And then they saw that it's something that they liked. So it went from 112 to 126. Had a small pull-in. And so I think I put on the sheet 122 as the first real support. But on the pull-in in the after hours, after the earnings, it came into 123.30. So if it does actually fail here at 128 and then fails at 126, 123.30 to 124 would be the next spot you'd be looking at here. That's right on the open. If it pops and comes back into 129 and fails, you're going to look for a pull into 127.5, 128. So we don't really have any resistance. So these are the 3 spots to look at on starts to pull in. 127.5 to 128, 126, and 123.40 to 124. And these support areas might not be relevant in the first 30 minutes, but obviously if it consolidates below 128 on the open and then starts to trend down, these areas become very important. So that is that. And this is a very liquid name. Could easily move $5 to $7 today. So if you look at just the ATR and you double it. So yeah, I mean, so if the high is 129 and change, very easily could come back down to 124 if it starts to trend down intraday. The next one is AVGO, Avago. They pre-announced good earnings, and here's the daily. This used to be Broadcom, BRCM, before the merger. This one's been trending up for a while. I think the last time I bought it longer term was, maybe this drop out down here to 140. And it's been trending since it broke out above 180. Had a couple little dropouts along the way. So let's see where we were at the beginning of it. So a year ago it was at 180. Now it's 258 pre-market. So 80, 40, it's over 40% from there. It's still off the highs. This is a serious resistance area, so it had a lot of trouble getting through there back in the fall. It broke through, came back and tested support, tested support, tested support, and broke below. So it's been about a 6-month consolidation, or spending a lot of time inside of this 260 to 240 area. This is a failure. Zoom in. So you can see it started to use this as support, made a new high, and it was a lower high, and then got the kibosh, probably as that sector in the market came off a little bit. And so now we have the pre-announcement. I guess they wanted to let people know there's going to be good news to stop the bleeding, stem the bleeding. And it's right back in here in the spot. So let's zoom in. That's a tough spot, potentially. You can already see people were waiting to sell it into 260. That was, can I put that on the sheet? Yeah, so that's our top resistance. First one is 258. And ideally, you would get a failure at 260. And you'd see, does it hold 250? Does it support it or no? Does it fail? Then you look for the pull into pre-market support to 255. And then below that, the real longer-term support is until here, which is always a possibility. The pre-announcement was okay. It wasn't great. I think it was about 3% raise. And then SFLY, I saved the thinnest one to last. It trades about 700,000 shares a day. I could easily see it doing 2 million, probably more than 2 million today. It's already done 50% of its daily volume, which is very in play. So they had very good numbers and they were buying somebody, and I think there was a lot of positive analyst comments. So let's take a look at the longer terms to see where we are. So actually, this is an interesting longer term. So it was compressing for a while, for years. It was getting tighter and tighter year after year. And so now you have this. Where is it? It's above. It's broke above this. Broke above this. So yeah, I mean, so huge breakout. So the first, I'd be curious to see if it could actually close above the prior all-time high from years ago. Did I put that on the sheet? 54. I put as the next support. It's actually, yeah, 54 really is the recent support. But if people hone in on this, the prior all-time high really is around 58 to 59 right here. First thing I want to say, let's go to the 5 minutes so we can drill down a little bit further. So initial reaction was to above 60 to 62. You can see it, then it dropped down quickly. They started to hold bids at 61. Then they made a new high at 63, so we want to point that out. So that's holding in the pre-market against the after-hours high. Let me put on the sheet. I put 62 after hours, okay. So the initial pop was to 62. So these are the two spots here. So if it's going to be super strong today, it's going to probably, even if it gets below 62, won't go by much. And then it'll work its way back up into this pre-market consolidation area. So it's up a lot. I guess my thought on it is it's up a little bit too much. Maybe it can close above 62 today. Over the next week or so, if it drifted down a little bit more, gave up a third of the gains from where it closes today, I would start to look at it as a longer term play potentially. But for today, I'd be thinking failure here in the pre-market, play the range to here, see if it can bounce back up, and if it fails to have a big bounce, maybe play it for a move down to here and use this kind of this range. HOG. So the funny thing about HOG, when I was looking at it, again, I managed my market short position on the open, and then I was off the desk most of the day. I just done a new script recently it's good for reversals and a couple other situations, but when it takes out a morning low and then gets it back above the morning low like it did right here, it gets long. and you can see it went up about 1 ATR. And then it would have been, the trailing stop would have been stopped out for here or something. And then it triggered again. Notice this low from 955 got taken out at 2 o'clock, and when it got above that, what happened? It had even a bigger reversal. So it's just a very common pattern, and it's a good script to have if you can't sit in front of your desk all day and put in the alerts to make the trades. That was one that worked quite well. Now, if you're on the desk and you saw it at 50 and it held a bit at 50, I'm sure you probably looked to play it for a bounce from there, back up at least to this 51 where it had failed to put in the low. It got up there, held for a while, and then bounced almost to 52. So you have basically a range of 50 to 52 with, and those are the spots where you want to get involved. I would say 50, 30 down to 50, and on resistance you have 50, 180 to 52. ESRX. This is another one that on the open was really weak. I think we had 75 as potential support. It overshot it right on the open. This one actually did a higher low. But there's another very common pattern in short-term trading. I want to point this. You could also do a script to this. So on the open, it put in its low. It bounced a couple of dollars, a few dollars, came back down, made in the higher low, and then came back up and basically failed at the morning high. But what it did after that was pretty interesting. So you have a range here of 75.5 to, let's call it to 73, about $2.50 range. And it actually consolidated in the top 25% of the intraday range, and it did it extremely tight. So anytime you have an extremely tight consolidation, after a break of that consolidation, if it's in the top 25% of the range or the bottom 25 and breaks in the direction of which part of the intraday range it's in, that's a pretty good trade. So for example, if it had failed here, it'd come back down here and had a really tight consolidation here and then broke to the downside, that would be a good short setup. So it was the opposite. It was just, I mean, this is extremely tight, meaning the buyers had stepped up and they're buying it here at 75, they're buying it, and it's really, really tight. It has a bar that breaks to the upside. You can buy a mat, and then you could also buy above the morning high. A two-tiered type approach, or two different scripts to handle that. Anyway, after those things happened, after the buyers took control, it ended up going up another $5. So just so happened that a couple of these second day plays that were top names yesterday traded in very typical, fairly common patterns for intraday. And you got to learn these patterns. So they're very good risk reward. So for today, 80 is a potential failure area. I would say 78 and 77 would be the spots I would be looking to see if the buyers step up to higher prices. And PE, I got kind of lucky on this one because it had gapped down and right on the open, I think I got it right before the open at 24.80 and it popped up 75 cents. Sold most of it, got stopped out, and then I bought into 24.60, and then I bought some more right here in the 40s. Then it popped back up to 80 cents, and I sold some, and then got stopped out of the rest. So, considering the fact that it trended down all day until they finally caught a bid here around 24, got pretty lucky. So let's see, it bounced back up to this area. So to me, I wouldn't be thinking the stock is turning the corner or reversing to be a good long again until it got through this area here and had a consolidation above 24.5. The other thing to think about is if it got a flush below yesterday's low and then got back above 24, then I would look at it for a move back up to this range as well. The next long-term support I think I put on the sheet was 23.35. And it does seem, if it takes out this yesterday's support right in the open is holding below 23.90, very well could get to that. But just key off of those levels. So that is it. I think we got some big names reporting after the close today, even bigger names tomorrow. It's going to be very busy the next couple of days. Stay focused.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.